Yeah, hot button item. And not just here in Jacksonville, across the country. Really, the landscape right now is because there is such low inventory right now across the country. If you are a buyer of real estate, and many of you have experienced this maybe with your own primary residence you're trying to buy or other investment properties, it's a fight to be able to buy a property. Like putting offers in is a crazy experience. Getting rejected is not fun. Showing up to open houses and seeing 40 other people there, right? That's the normal way things are for buying properties right now. You've got some converging things that are happening. So you got such low inventory out there right now, and you have such high demand that buyers are buying and waiving a lot of the normal contingencies that they would have. I mean, buyers are out there, and in order to be able to buy the property they want to buy, they have to buy in cash, which means that they waive their financing contingency, or they're buying with financing and they're waiving their appraisal contingency. They're waiving their home inspection if that's what it takes to be able to buy. That's just the reality of an environment like we have right now, where supply is so low and demand is so high. You can read this in many articles across the country. You'll see it out there. That's just the reality of it. Specifically, the conflicting things that you're seeing is prices are going up, but appraisals are having more issues coming in at value. And we're seeing that here in Jacksonville as well. We're seeing that here with JWB. Year over year, we have a very low percentage of appraisal issues because we price the properties at market value. But what happens as you see prices go up rapidly, which is what we're seeing because of low supply and high demand, appraisers are in a tough spot, because as prices are going up and the property next month is more expensive than the one that just sold, appraisers' whole business model and value is based on what happened yesterday, not what is happening right now. And as values are going up a lot more right now, they're in a tough spot. Appraisers are also in a tough spot because they're never going to, they are incentivized to be at loan value, at market value, or below. There is a huge disincentive to go high, right? Because what happened during the Great Recession, right? Lenders started taking it on the chin for lending out money that probably shouldn't have gone to people who were borrowing it. And of course, they looked to pass the blame to anybody else. And they looked at appraisers and said, well, why did you value this appraisal so high? And appraisers were like, well, that's what it was when I looked at the comps 3 months ago or 6 months ago. But by that point, appraisers had, the market value was doing something different. So appraisers are always incentivized to go low or be at the right market value. They're never incentivized to go high. So those are some of the macro elements that are happening in this marketplace. To bring it micro to us here at JWB, we price all of our properties at market value, but we're seeing more appraisal issues. And so the way that this will land on clients who are going through the loan process is that you need to be prepared for one of two things: either to go through multiple appraisals, which really means multiple loan processes, or be prepared to bring the difference to closing. And that is an option for every client that goes under contract. The cool thing is we explain all of these things, of course, before we go under contract with you. So again, during the normal client onboarding, this is a big topic of discussion. We make sure you're fully prepared. But I'm seeing more clients make one of those two decisions now than I did 6 months ago. And I think it's going to continue. I think it's going to be here for quite a while. So, if, of course, we go under contract, the price is the sales price. If the appraisal comes in lower, the client has the opportunity to go through that second loan process, which would get another appraisal. And hopefully it comes in at the value that it should. If it doesn't, the client can make the decision to bring, might be a couple $1,000s difference to the closing table, or $5,000 closing difference to the closing table. You can make the decision to do that. Sometimes it makes sense to do that. Sometimes it doesn't. And we're open to either one, but that's just the reality. It's, that's what happens in a rapidly increasing real estate market.
Yeah. And then when you look at it from the retail side, right? People closing on homes right now on the retail side are paying above asking price and are just trying to get it done because of the speed of transaction, right? So I see it as an investor, at least you are, when you're coming to JWB, you know that your property is there for you, and it's not at least how I experience it, right? There's not a rush on my end to think that, oh, you're just going to go give this to somebody else as long as I'm still in it. It's just an expectation setting on, depending on my own timeline. Do I want to just go out and get another appraisal, or do I want to just bring the difference in cost because I want to move on with my life and not be closing on a property, right?
Yeah, exactly. I mean, it is it's something we're going to be with you, whatever you decide, right? And we're going to talk through the pros and cons. If you want to go down the appraisal, the second loan process route and the second appraisal route, you're going to incur costs there, right? You're going to get another appraisal. Sometimes they require two. So appraisals cost somewhere around $500, maybe $600. So you might have $500 to $1,000 cost out of pocket just to go through with that second process. We all know that loans are not fun to go through. So you might be setting yourself up for another month of work back and forth, getting document updates and things like that. So if it's a couple $1,000s, maybe to $5,000 difference, is usually for most people, they're going to bring the difference to closing. Again, everything is justified by other things that are selling in the area. So all this data is provided. So they don't feel like there's this risk that they're paying over market value. But you bring up a good point that other people in other areas, there's such a dearth of inventory right now that people are actually willing to pay more than market value over list price many times. We're not going to ask you to do that. And if the appraisal comes in higher than what the sales price is, we're not going to ask you to pay more as well. So it's a fair approach. Just wanted to make sure that everybody's, aware, because things as they were 1 year ago in real estate are different today, and we'll continue to keep you updated.
Seems like a world that continues to change more and more rapidly, man. It's good to have it's good to feel safe inside the JWB cocoon of people that can handle stuff for you when things are changing.